Hi, we're back again with Finding Financial Freedom. To many of you, financial freedom means escaping to your gorgeous holiday house every weekend. And this idea of heaven is attainable to anyone, if you've planned it right. Superannuation is all about planning in advance. Peter, how is managing your superannuation fund going to help our viewers to be able to chill at the holiday house every weekend?
Well, yes, Iolande. The holiday house is the end result of a lifetime of good, hard savings and a good investment strategy for your super fund. But first we need to understand what superannuation is and what it's used for. Superannuation is basically just another tax entity. So the benefits of superannuation, when we've eventually retired, there's no tax that comes out. We've got this pile of money, whether we put it as a pension or pull it as a lump sum, there's no tax. But to get into that situation, we have to start saving on a regular basis. And that can be done a few different ways. Okay. So we could salary sacrifice. In your situation, if we put in, say, $10,000 into a superannuation fund from our salary, it would lose 15% tax.
Yes.
The difference is, if you took it in your back pocket, you would have $2,350 less in your back pocket than if we had it in superannuation.
Right.
That's a lot of money compounding over many years.
Mm-hmm.
So we need to start thinking about that, particularly if we've got a high income where we don't need to have all the money. We can save a substantial amount of tax. Another way is if we had lump sums that we could put into superannuation. That could be from an inheritance or from savings that we don't need till our eventual retirement, so we can put that into superannuation as well. Eventually, when we get to retirement age, there's no end tax. So if we had assets in there, such as an investment property through a self-managed super fund, for example, there's no capital gains tax. There's no end tax. So superannuation has so many benefits to it, but you have to start now. There's no gain without the pain.
That's something I need to get onto. And tell me a little bit more about this salary sacrificing. Salary
sacrificing is the fundamental savings that we need to do. The government makes us put in the 9.25% this year. Your employer puts that in. But you've got to make sure you put some in as well, because 9.25% is not going to be sustainable to give you this beautiful holiday home. We need to put more in there. And as a minimum, I'd suggest that we put at least 5% of our salary into salary sacrificing.
Okay. Well, I'm going to leave you to it, since I've still got some planning of my superannuation to do before I can hang out here all weekend. For help with your superannuation, feel free to call Peter on 02 4627 5200 or visit macarthurfp.com.au. See you next week when we discuss risk insurance.